On June 12, 2026, the stock market did something it almost never does. It welcomed the biggest IPO in human history and then completely fell apart. This is the story of how SpaceX going public triggered a $1.3 trillion wipeout and why the world's most hyped stock might already be a massive trap. Let's start with the headline number. SpaceX raised $75 billion in its initial public offering. That is not a typo. $75 billion in a single day. For context, the largest IPO before this was Saudi Aramco in 2019, which raised $25.6 billion. SpaceX nearly tripled that record. The company listed on NASDAQ under the ticker SPCX. It priced at $135 per share on June 11th, giving it an implied valuation of $1.77 trillion. By the time the market closed on June 12th, the stock had already jumped to $160.95, a 19% gain on day one. Elon Musk had turned SpaceX into a public company worth more than most countries' entire economies. But here's where the story gets complicated. Because while SpaceX was celebrating the biggest IPO in history, somewhere else on Wall Street, a disaster was unfolding. Billions of dollars were evaporating in real time, and SpaceX was directly responsible for it. To buy $75 billion worth of SpaceX shares, institutional investors, the big hedge funds, pension funds, and asset managers had to sell something. And what they chose to sell was semiconductors. The entire chip sector, all at once. On June 5, 2026, 1 week before the IPO, the Philadelphia Semiconductor Index dropped 10.3%. That was its worst single-day collapse since the COVID crash of March 2020. In dollar terms, $1.3 trillion in semiconductor market cap was wiped out in less than 24 hours. Nvidia fell 12%. AMD dropped 10%. Micron lost 9%. Intel cratered 13%. Broadcom plunged 14% after its quarterly earnings missed AI chip revenue expectations by over $1 billion. Every single major chip company got crushed, not because of anything they did wrong, but because the world needed cash to buy SpaceX. Think about what that means. Millions of ordinary investors who owned Nvidia or AMD in their retirement accounts lost thousands of dollars. Not because those companies underperformed, but because Elon Musk decided it was time to go public. The SpaceX IPO broke the market before it even started trading. Now let's talk about what you are actually buying when you buy SPCX. Because the SpaceX that went public in 2026 is not the same company that launched rockets in 2010. A lot has changed, and not all of it in the direction you might expect. In February 2026, SpaceX acquired xAI, Elon Musk's artificial intelligence company, in an all-stock deal. xAI owns Grok, the AI chatbot that competes with ChatGPT. It also owns the Colossus supercomputer, the largest AI training cluster in the world. And it owns several other AI bets that Musk has been personally funding for years. The problem is that xAI lost $6.4 billion in its last fiscal year. $6.4 billion. Gone. And that loss is now sitting inside the SpaceX balance sheet that public investors just paid $1.77 trillion to own. Add it all up, and here is the financial reality of the company the world just crowned as history's most valuable IPO. SpaceX posted a net loss of $4.9 billion in 2025. That's after generating $18.7 billion in revenue, which grew 33% year over year. The company is growing fast. It is also burning through billions. So how is it worth $1.77 trillion? That question is worth asking. At IPO price, SpaceX was valued at 113 times its trailing annual revenue. For comparison, Nvidia, considered one of the most expensive stocks in the AI era, trades at around 25 to 30 times sales. Tesla trades at 16 times. SpaceX is priced at more than 4 times Nvidia's multiple. Morningstar, one of the most respected valuation firms on Wall Street, ran the numbers. Their analysts concluded that SpaceX's fair value is approximately $780 billion, not $1.77 trillion. That means at IPO price, investors are paying more than double what the fundamentals justify. NYU professor Usvath Damodaran, known as the dean of valuation, publicly called the IPO mood-driven speculation. But the bulls have a counterargument, and it starts with Starlink. SpaceX's satellite internet division now has 10.3 million subscribers worldwide. That number more than doubled in a single year. Starlink generated $4.4 billion in operating profit in 2025. It is the engine that is actually making money inside this company. The problem is that Starlink's average revenue per user is falling. It dropped from $99 per month to just $66 per month as SpaceX aggressively cut prices to compete globally. More customers, but each customer generating less. The math gets harder over time. Then there's the Google deal. On June 6, 2026, just 6 days before the IPO, SpaceX announced that Google had signed a $30 billion AI compute contract. Google will use SpaceX's Colossus supercomputer to train AI models. That single deal, announced at the perfect moment, sent a clear message. The biggest names in tech believe in this company. Timing is everything. And some critics noted that a $30 billion deal announced 6 days before a $75 billion IPO is not a coincidence. Whether it was strategic or simply fortunate, the announcement helped push the offering over the top. Now let's talk about Elon Musk, because with SpaceX, you cannot separate the company from a man. Musk kept SpaceX private for 24 years. He famously said he would never take it public. Wall Street begged him for a decade. He said no every time. So what changed? The answer appears to be money. SpaceX needs enormous amounts of capital to execute its ambitions. Starship, the massive rocket designed to take humans to Mars, is still in testing. The XAI integration requires billions more in compute investment. The Colossus supercomputer needs to keep growing. Going public was the fastest way to raise the capital to fund all of it. But here is the catch. Musk is not giving up control. Not even close. SpaceX went public with a dual-class share structure. Regular investors who bought SPCX shares own Class A stock. Each share gets 1 vote. Musk holds Class B shares. Each share gets 10 votes. He controls the company absolutely, regardless of how many shares the public owns. If SpaceX ever makes a decision you disagree with, a bad acquisition, a reckless spending spree, an AI project that burns billions, there is nothing you can do about it. You are along for the ride, on Musk's terms. That is what you are buying into at $160 a share. There's also the XAI wildcard to consider. The acquisition absorbed a company that lost $6.4 billion last year. But it also gave SpaceX something Wall Street is desperate for right now, an AI story. Grok competes directly with ChatGPT and Gemini. The Colossus cluster is already attracting enterprise customers like Google. If XAI turns around, it could transform SpaceX's financials entirely. SpaceX is also sitting on a potential $60 billion option. The company has the right to acquire Cursor, the AI coding assistant made by AnySphere, by December 2026. If it exercises that option, SpaceX enters the AI developer tools market, one of the fastest growing segments in all of technology. If it passes, it pays a $10 billion collaboration fee instead. So you have a company that is simultaneously the world's leading rocket maker, the dominant global satellite internet provider, a major AI compute landlord, and now a publicly traded stock. It is either the most visionary investment opportunity of the decade, or the most spectacular bet at a valuation that math cannot justify. Wall Street is divided. The IPO was oversubscribed, meaning more people wanted in than there were shares available. Day one buyers made 19% in a single session, but several prominent fund managers publicly said they passed, calling the valuation disconnected from reality. The gap between believers and skeptics has never been wider. And remember those semiconductor investors who got crushed in the week before the IPO? Nvidia recovered somewhat, but the ripple effects of a $1.3 trillion single-day wipeout don't disappear overnight. Volatility stayed elevated across the tech sector for days. Some pension funds are still counting the losses. Here is the bigger picture that most news coverage missed. The SpaceX IPO did not just create a new publicly traded stock. It restructured the entire technology investment landscape. Money that used to flow into Nvidia, TSMC, AMD, and Broadcom now flows into SPCX. The pie did not get bigger, it just got redistributed. Whether you think SpaceX is the buy of the century or a $1.77 trillion bubble, one thing is undeniable. This IPO already changed the stock market before the opening bell even rang. The $75 billion raise triggered a crash. The first-day pop created instant millionaires, and the debate will be raging for years. The questions that will define SPCX's future are already stacking up. Can Starlink reverse the declining revenue per user trend? Can xAI's massive losses turn into profits? Will the Colossus supercomputer land more $30 billion contracts? Will Starship finally fly reliably to orbit? Every one of these questions is a variable in a valuation model that already assumes perfection. At 113 times revenue, there is no margin for error. Not in the rockets, not in the AI, not in the satellites, and certainly not in the leadership of a CEO who is simultaneously running Tesla, overseeing Doge, posting on X, and now managing a newly public $1.77 trillion company. History will judge whether SpaceX at $1.77 trillion was the Amazon of 2026, wildly overpriced at the time, but prescient in hindsight, or whether it was the WeWork of space. All story, all hype, and ultimately a painful lesson in the gap between vision and financial reality. What we know today is this. Elon Musk raised $75 billion in one day, crashed the semiconductor market by $1.3 trillion in the process, and handed retail investors a front-row seat to one of the most audacious financial stories of the decade. And it all happened in June 2026. If you found this story as wild as I did, hit subscribe. Every week, we cover the real money stories behind the headlines, the numbers they do not always tell you about, and the consequences that take months to unfold. Thanks for watching Money Stories.